Good afternoon, everybody. It's 4 o'clock, so the start of this webinar where we will talk you through the most important ratings and benchmarks. We could, well, let's just start, and people will come in probably throughout the webinar, and we can start the introduction. Let me see. So first of all, for whomever who doesn't yet know us, we are Sustainalytics, a consultancy firm specialized in sustainability, corporate social responsibility. So we help companies with their strategies, data, external reporting, and the different benchmarks and ratings. My name is Nick de Ruiter. I'm one of the two founders of Sustainalytics, and I'm here together with my colleague Tijn Willems. Also a consultant at Sustainalytics, and he is specialized in a number of things, but amongst others in the responding to investor requests by means of investor ratings and the different benchmarks. As said, we help companies with strategy, impact, performance management, data, and external reporting and recognition. And recognition is where we will find all the services we provide, helping companies with their benchmarks and ratings, limit the administrative burden, try to increase the score, but also to try to tie it into continuous improvement. We have offices in Utrecht, Cologne, Brussels, and in Melbourne, and we're roughly with 40 consultants, serving roughly over 180 clients. So that in terms of the introductions. Let's go to some trends and developments we've seen recently. And it's if you are active in sustainability or working in sustainability, this is not new for you. But there are some recent developments, and I'm not necessarily yet talking about COVID-19, but some sustainability related trends and developments. Such as the fires in the Amazon forest and other big developments setting sustainability higher on the agenda. And of course, we have the COVID-19, the corona pandemic. And if you just read through these type of sentences, you say, well, the COVID-19 pandemic is a global crisis that poses a risk on health, employment, production, etc., etc. You could easily replace it with climate change, because climate change might, for instance, or sustainability or a lack of biodiversity might become this new global crisis, and maybe even bigger than the COVID-19 or corona crisis. And probably people active on LinkedIn already seen such images being circulated where say, well, we're happy when this corona crisis is over, and then maybe climate change is even an even bigger crisis, an even bigger impact for mankind and companies worldwide. So not unsurprisingly, we see different groups of stakeholders acting upon this. So, for instance, we see the larger investors acting upon this, trying to decarbonize, trying to know more of their investment portfolio, and forcing basically more sustainability performance on companies they invest in. And this is just a couple of snapshots. There are many more. And I think through Corona, we kind of will be meeting our carbon targets here and there. It was in the news yesterday. One of the bigger pension funds in the Netherlands will be meeting their carbon targets, but that's just on the short term. So, and for the long term, we'll still need to do things, and we still see investors acting upon it. But also the different legislators. So last week we had a webinar on the EU taxonomy, and we see this becoming bigger and bigger and bigger, and impacting the ESG disclosures you need to disclose, impacting the way sustainability ratings will be rating you, and the information they will provide. And we had Ursula von der Leyen in 2019 saying, well, the Green Deal we're currently making and constructing will be our man on the moon moment. And obviously with Corona and COVID, we thought, well, that's maybe something that will be cancelled for now. but she actually reassured it the 28th of April, said, well, we'll still go on with the Green Deal. And the Green Deal actually is quite a big thing. It will trigger a lot of capital going towards sustainable investments, but it will also have EU budget involved. And the figure on the left shows what type of amounts we're talking about. So this is not pocket money. It's at least 1 trillion going towards sustainable finance. That means you need to be prepared to provide the ESG disclosures necessary to both rating agencies, legislators, banks, etc., etc., etc. Because financing the transition is basically the backbone, one of the larger backbones of the transition in the Green Deal towards 2050 climate neutrality. So that's why we also decided to inform you guys, our clients, potential clients, on the impact coming from rating agencies and benchmarks, inform you a little bit on the latest developments and trends, because roughly now is the season to respond to the different ratings and guidelines. Should you have any questions, just let us know. We'll send an after mail with all our details. It's in the slide deck as well. We obviously will be sending our slides around. And now I would like to give the word to Tijn Willems, who will take us through the landscape of different investors, as well as the different rating agencies. Tijn, the floor is yours.
Yes, thank you, Nick. So as Nick mentioned, thanks for the introduction, by the way. I will discuss something a little bit more about the investor perspective. So sketch the investor landscape and touch also upon a couple of benchmarks we deem most relevant for our clients, but also relevant to other companies. And then we will discuss, or I will discuss, some of the benefits of actively participating in these benchmarks. So when we've been looking at the investor perspective, we've seen that over the 10 to 20 years, sustainable investment has been taking a significant place within the investor sphere or landscape. At this moment, 70% of the investors already acknowledge that they have implemented ESG strategies, meaning that they include the ESG factors within their sustainability, within their investment criteria. And you can also see it in the figure presented on this slide. So where in 2016, the assets with sustainable investment criteria were roughly a little bit over the $20 trillion US. Within 2 years, it has almost reached, or it has been hitting the $30 trillion. And it has been increasing ever since. And also another thing we've seen is that within the investment perspective of the investors are also looking to integrate the UN Sustainable Development Goals within their investment practices, meaning that when they set out an investment, they are looking towards, okay, how is this investment contributing to either one of the Sustainable Development Goals? And also within their own portfolio, looking at, okay, how can we as an organization or as an investor contribute to specific SDGs? What we also see, but this is a trend which has been seen for multiple years now, is that climate indices are outperforming their traditional, so to say, benchmarks. For example, when looking at the FTSE All World Index and the FTSE Climate Index, over the past 5 years, the climate index has been outperforming the world index. But what might be more relevant, especially during these times, is that since the corona stock drop, or since the fact that the coronavirus made the stock exchange drop, we see that the sustainable funds were less affected by these drops and are outperforming also the traditional benchmarks at this moment. So the companies which are focusing on climate change, even at this moment, are still outperforming the traditional benchmarks as the virus is spreading. A thirdly interesting trend we've seen is that investors are integrating CO2 reduction targets within their investment portfolio. Especially the Dutch financial institutions, this is a relevant trend due to the fact that the climate commitment they've signed regarding the climate agreement. which means that they are required, so all the financial institutions are required to provide insights into the footprint or the emissions within their investment portfolio. As also highlighted in this on this slide, for example, that ASR and ING already have been doing so since 2018. In 2020, all financial institutions that have signed or committed to the financial commitment on the climate agreement are required to measure this. And in 2022, they also have to set targets on how to decrease the emissions of their portfolio. Also, we've seen that this trend is integrated in some of the benchmarks. For example, the Carbon Disclosure Project recently announced that within this year's benchmark, the financial sector is required to provide insights into the Scope 3 emissions, ergo the financial of the investment emissions. And this will trigger a lot of new insights for investors, but it will also trigger new investment motives, because when they have set targets, they have to determine, okay, do I want to invest in a company which is focusing on renewable energy, or do I want to invest in another company which is not? Then probably the reasoning behind it will be, okay, we will invest in the organization which is more focused on the renewable energy. So that might be a very relevant trend for the coming years. And also what we've seen is that it has changed the engagement and the voting behavior of investors. So these are all, sorry for the Dutch examples, but mostly Dutch examples in which the investors have been actively engaging with their clients or with companies to push them more towards sustainable performance. As you, for example, can see within the Shell resolution by Follow This, but also within other investments, excluding specific sectors or specific companies from their investment perspective, just to push them or try to push the organizations more towards better sustainable performance. And another interesting thing is that we've seen last year, for example, is that it's also been used as a, so to say, not a weapon, but more of a defense mechanism towards hostile takeovers. The example of AkzoNobel and the PPG hostile takeover was one of the examples in which AkzoNobel mentioned that the sustainability performance of PPG isn't related to or isn't at the same level as the sustainability performance of AkzoNobel. So therefore, they didn't want to merge or participate in the acquisition. Here we have highlighted or outlined some of the practical examples of investors or financial institutions which are using sustainability ratings and frameworks to support their investment decisions. So one of the examples is APG, which has been asking the companies they invest in to make use of the task force on climate-related financial disclosures within their reporting, but also within their communication. ABN AMRO using the principles for responsible investing to assess the management of their investment funds that are offered to the clients. Allianz, the German insurer that is collaborating on partnering up with the Science Based Target Initiative to provide more insights into their own scope 1, 2, and 3 emissions, but also to set targets in those scopes, which might be very relevant for their investment decisions. And furthermore, we see that PGGM has been using Vigeo Eiris as a data provider for listed companies to provide ESG data, and ING has commissioned the ISS Ecom to assist within its green bond program by assessing the sustainable added value of a portfolio. And these are all practical examples in which we've seen that financial institutions are really collaborating or specifically mentioning and using different ESG ratings or ESG frameworks within their organizations to base investment decisions upon. And of course, as Nick already mentioned, the EU taxonomy to determine whether an investment can be seen as sustainable, because that's one of the questions a lot of organizations, but also investors had been having the past years. When can an investment be seen as sustainable, or when is a green bond or a bond specified as green or sustainable? And this EU taxonomy should provide more information on whether an investment can be seen as sustainable. And a brief introduction about it is that there are two specific things that have to be taken in mind. First of all, it should be contributing to at least one of the 6 mentioned objectives within this slide. And it shouldn't do any harm or significant harm to either one of the other objectives. And thirdly, it has to meet the minimum safeguards of the OECD guidelines and the UN guiding principles on business on human rights. So what I would like to then discuss is some of the sustainability ratings and benchmarks we've been working with, but also we've been seeing our clients using the most, and which might be most relevant for our clients and other organizations. What's very interesting is that at this moment, or even last year already, we've seen that there was an increased interest by credit raters and ESG and investors in those ESG ratings, and also the acquisition and merge of some of the bigger credit ratings with specific benchmarks. So in the early 2019, so in April 2019, Moody, the credit rating Moody, acquired a majority stake at Vigeo Eiris. And in late 2019, the credit rating S&P Global acquired the Dow Jones Sustainability Index. At this moment, we don't know exactly what it would entail, but it shows really good how these ratings and benchmarks and ESG data is used by investors, but also for, in this case, credit raters to be incorporated within their decision making. And we wouldn't be surprised if S&P Global and Moody's, for example, will put in more ESG ratings within their credit ratings, or base their credit ratings also on the ESG ratings. And 2 weeks ago or 3 weeks ago, it came to our attention that Sustainalytics, one of the other ESG providers, was acquired by Morningstar. Morningstar is an investment management and investment advisor organizations from Canada. And the two teams are confirmed to join forces to empower the type of investments to drive long-term value. But within the whole perspective, or the reason why we also wanted to provide you with some more information on the different benchmarks is due to the fact that there are a lot of different ESG ratings, and all these different ratings can still be very confusing for the investors, but also especially for the companies participating with or actively engaging with all these benchmarks. So what we've seen, or what has been researched, is how do the different ESG ratings correlate with each other, because many of the ESG ratings use different indicators, or don't slightly tend to agree on what topics they should cover. But it showed that the correlation between the ESG scores from 5 different ESG raters, so the Asset 4, KLD, Robeco Sum, Sustainalytics, and Vigeo Eiris, was on average 0.61, while the correlation between the ratings by, for example, Moody's and S&P, so the credit raters, was 0.99. So we also hope, and we see that also being done in the market, that the acquisition of the benchmarks, or the merger between benchmarks and credit raters, will lead to more transparency and standardization within the ESG rating industry. And to elaborate on that, we would like to discuss more about the specifics and the differences between the 6 most important ratings and benchmarks in our opinions. So that's the Dow Jones Sustainability Index, MSCI, Vigeo Eiris, the Carbon Disclosure Project, Sustainalytics, and ISS EUCOM. So first of all, I will briefly tell you some more information about the Dow Jones Sustainability Index. As mentioned previously or earlier, it's acquired by S&P Global in 2019, but it's also been one of the most renowned and most used benchmarks by organizations. The invited universe, so every year more than 3,000 listed companies are invited to participate within this benchmark. And the main difference between other ratings and benchmarks is that this benchmark is really looking or asking organizations to fill in and participating by filling in a self-assessment. In the self-assessment, economic performance, environmental performance, and social performance is measured. And the tool is not only used by investors, but it's also driven by for internal improvements, because it provides the organizations sufficient insight in whether specific topics are relevant for investors and how organizations should improve their performance. So the results have been for this benchmark are presented with a scoring from 1 to 100%, and the individual companies are able to are ranked within the same industry, and within each industry, the top 3 or the top 5 performance, out of my head, are included in the DJSI world. Other organizations or other companies which are participating in the benchmark but are not one of the top performers are not included in such an overview, and therefore the scores in other organizations are not publicly available. The second benchmark I would like to, or ESG rater in this case, I would like to discuss is MSCI, the Morgan Stanley Capital International. It's a US-based ESG rater, and it's an international leader in providing support for investment decisions for asset management, banks, etc. It's an important tool for investors, and it's been incorporated more than 6,000 companies. Compared to the Dow Jones Sustainability Index, in which the organizations are asked to fill in a self-assessment, within the MSCI index or within the MSCI ratings, organizations are analyzed by MSCI based on their publicly available information, and MSCI provides them with a rating or a comprehensive feedback report. Companies, after they've received the report, have been granted the possibility to provide feedback, and during that feedback the organizations can add additional information or provide additional input to provide or to try to improve their scoring. The results or the rating is based on an AAA to a CCC scale, in which the performance is also based and compared to the peers, but the business performance will not be made public, so it's only shared with the organization itself, and it can be bought by investors, the information for the different companies. The third one is Vigeo Eiris. This is also one of the benchmarks which has been incorporated or been taken over, in this case by Moody's. This benchmark or this rating agency has two different measurement or two different services they provide. The first is the Vigeo Eiris rating. This is more an ESG research and solution for investor, so it's very investor driven. And then there's the Vigeo Eiris Enterprise, which is supporting and assessing organizations, so it's more for internal decision making. This benchmark or this rating, it has more similarities with Dow Jones, since there's also an opportunity for organizations to fill in a self-assessment, and there's a tool in which they can provide additional information and in which they can add additional resources and provide answers to specific questions. The scoring is received on a 1 to 100% score, and there's an overall classification on a 4-point scale, in which the organizations are categorized as proactive, responsive, partially responsive, and not responsive. And also for this benchmark, the top performing companies are listed in the index criteria, which is publicly available, but the other organizations are not, and the scoring and the content isn't available. The fourth one we would like to discuss is the Carbon Disclosure Project. This is a non-governmental organization that encourages companies, but also cities and regions to measure their and provide information on their environmental impact. It's currently the largest database of climate change information, in which the top almost more than 4,000 large companies are invited. But as mentioned, organizations and cities can also report their environmental or the climate change, forest and water information. It's all driven by investors, but there's also a supply chain aspect within this benchmark, in which specific companies can ask their suppliers to fill in the CDP questionnaire to be able to calculate, okay, how many scope 3 emissions are related to my relations with supplier A, B, or C. Within the results are performed from an A level to a D minus, in which A level is the best ranking and the D minus is the lowest. The methodology and the final ratings are all publicly available. So that's one of the biggest differences between the other benchmarks and ratings, is that the methodology and the ratings are all publicly available. So if organizations incorporate information within this benchmark and they agree that it's published, then the information will be available for everyone. Then we have Sustainalytics. As we mentioned, Morningstar acquired a majority stake in Sustainalytics, and this benchmark is pretty similar, or this rating is pretty similar to MSCI in the vision that it's also the analysis of the companies is performed by Sustainalytics itself, and the organizations are provided to a feedback or invited to a feedback round in which they can try to improve their scoring by delivering additional information or providing additional publicly available information with regard to specific indicators. The scores are received are ranking from 0 to 100 scale, and the Sustainalytics identified leaders and laggards for each industry. The scoring methodology, however, is not made publicly available. And then lastly, we have ISS Oecom. This is also a world-leading provider of corporate governance and responsive solutions for asset owners. And in that case, it's also pretty similar through the methodology and how it works with Sustainalytics and MSCI, in the case that the fact that they provide an ESG rating to the organizations, and the organizations have the opportunity to react on the first report and provide feedback. The overall evaluation system is based on a 12-point grading scale, from A+ being excellent to D- being poor performance. But the corporate methodology is publicly available, and the scorings are only delivered to the clients and investors on a payment. So these are the 6 most relevant benchmarks and ESG ratings we've seen in the market at this moment for our clients, but also for other companies. And then we want to discuss, or we would like to highlight, why participating, in our opinion, is very important for organizations. So we have set up 5 different reasons for organizations to actively engage with these benchmarks. So first of all, as mentioned earlier on, the ESG ratings are really used by investors to inform company analysis and also to make investment decisions. Rate the Raters, it's a research institute that benchmarks also rates the rating agencies, and they also include investors within their and companies within their research. So investors have in 2020 included that the reasons for using ESG ratings, 71% of the participants said that they use the ESG ratings to provide information to investment performance. And we also see it in research done by the Global Sustainable Investment Alliance, in which they say that global sustainable investing strategies are based mainly or especially on ESG integration. The growth between 2016 and 2018 was 70%. So meaning that ESG performance and ESG integration and information from companies is included more and more by the investors within their investment decisions. The second reason, which might be relevant for organizations to participate or actively engage within the ratings, is that investors represent trillions of assets. For example, the Carbon Disclosure Project has been used, or it's confirmed that it's been used by 515 investors with over $106 trillion in assets. And for example, Dow Jones, only at the Robeco Group alone, it represents over 100 billion US dollars. And also MSCI covers a lot of investors with a lot of investment possibilities. A third and interesting trend, but also a very relevant one for organizations to participate, is that we've seen that ESG ratings are finding their way towards access to capital. A big improvement or a big trend we see is that sustainability, the growth of sustainability-linked loans, which are loans which are linked to the sustainability performance of organizations. When organizations have a better scoring on sustainability indicators, the lending requirements are better, and so to say, for example, the investment or the interest rate could be lower due to the better performance on sustainability. And we see that ESG ratings are taking two roles within these sustainability-linked loans. So first of all, for example, in the example of Accor hotels and SBM Offshore, we see that the linked loans or the loans they've received from the banks is linked to their performance in ESG ratings. In this case, Sustainalytics, which means that when they receive a higher score from Sustainalytics, they have better lending conditions, or it will be improved, rather than when the Sustainalytics score is lower, the lending conditions will be decreased or will be less attractive. And the second role we see for ESG ratings is one of the example of Iberdrola, which has been collaborating with BBVA and signed a credit facility. And the credit facility was based on specific sustainability indicators. And ESG rating agency Vigeo Eiris is the organization that reviews and assesses the sustainability indicators or validates them. So in that case, it's more of an audit perspective in which the ESG rating determines whether the performance is meeting the criteria which have been agreed between the lender and the investor. So that's also one of the important reasons we think it's very interesting for organizations to participate in these ratings and benchmarks. And we also see that it's been used for internal improvements and decision making. So especially, for example, here you see some examples from the Dow Jones Sustainability Index, where the VP and Chief Sustainability Officer of US organization Linde especially expresses that they've been using the Dow Jones Sustainability Index as an internal assessment tool to improve their sustainability performance and to know what steps should be taken to improve their scoring, but also improve sustainability and their sustainability strategy. And 2/3 of the respondents in the Rate the Raters research in 2019 mentioned that they use the ESG ratings to inform decision making, but also mentioned that the internal assessment as a strategy and to help to inform what data they should disclose, but also to identify trends and to support stakeholder engagement. And lastly, we see that ESG ratings are used to showcase sustainability leadership. So the best performing organizations, so to say the front runners, are showcasing their performance within the different benchmarks. Many of the organizations has been seen as front runners, also based on the fact that they've been receiving higher ratings within the benchmarks. And in some cases, it's also been used by organizations within a marketing perspective. For example, KPN, that has been been performing the Dow Jones Sustainability Index and making it one of the most sustainable telecom companies in the world. But due to their scoring and due to the fact that they've been being one of the leaders for years now, it also could be used or has been used as a marketing tool in which they use the benchmarks and ratings performance as an indicator to showcase, okay, we've been outperforming our benchmark, we've been outperforming our peers, so we can say that we are the most sustainable or the most green provider in the whole world. And those are basically the 5 most important benefits and benefits we've identified for organizations to actively participate in ESG ratings and benchmarks. So a short recap before we want to finalize, and I will hand it over back to Nick for the conclusion. The recap is that we've provided you some information on the investor perspective. So what are the trends we've seen within the investor landscape, and how what is the role of ESG raters within that case? We've touched upon 6 of the most relevant benchmarks and ratings in our opinion, and we've provided you with 5 of the most relevant benefits of actively participating in either one of the benchmarks. So, Nick, I would like to give you the final words, so to say.
Thanks, Stijn, for all the information you've given. And indeed, as you said, we see it becoming more and more important as due to the recent takeovers by the over credit raters. We might expect indeed that ESG information will be part of overall credit rating and decision making. We see sustainability rates also becoming included in remuneration, so something to take seriously. Also, following the EU taxonomy. This webinar is recorded, so we will distribute the link to everybody. We will distribute the slides as well. Should you have any questions, our contact details are both in the slides, and obviously you can either respond to one of the other Sustainalyzers or us, or reply to the mail you will receive. Due to Corona, we have planned many webinars, so there are some series maybe to follow, so that's something you can find online and on our LinkedIn page. But we had a series of 3 regarding the EU taxonomy. The first one was last week, an EU taxonomy for dummies, so to say. The next one will be next Tuesday on the EU taxonomy and the potential impact on financial institutions. And there will be a third one with impact on, say, the industry. Now, to prepare if you are falling under the non-financial reporting directive. And EU taxonomy is something to bear in mind. We also have planned a webinar on the task force on climate-related financial disclosures. We see this becoming bigger and bigger as well. Also related to EU taxonomy, where climate adaptation is a large part, but also related to the non-financial reporting disclosure and some of the previously mentioned benchmarks, for instance, CDP. So that's something to follow as well. So that's roughly speaking what you might expect in terms of webinars the coming weeks. So please follow us on either LinkedIn or have a look at our website. If you have any questions, just reach out, and I would like to thank everybody for his and her attention, and hopefully we'll meet again. Thanks.